As Tesla continues to lose market share, more foreign automakers are trying to take over the American EV market throne. One such player is Toyota, and we believe they have what it takes to go against Tesla. Keep watching as we take you through all there is to the Toyota stock. But before we do that, subscribe to our channel $1 World for regular Toyota stock updates. Toyota, the renowned global vehicle manufacturer and a true pioneer in automobile innovation, has an illustrious history of leading the way in the automotive industry. With remarkable breakthroughs such as the successful introduction of the first commercial hybrid and the initial offering of battery electric vehicles for consumers, Toyota has consistently demonstrated its commitment to driving the future of mobility. As the automotive landscape shifts toward a greener and more sustainable future, Toyota has recognized the importance of electric vehicles. To solidify its position in the rapidly expanding EV market, the company is embarking on aggressive steps to further its share in this domain. An impressive commitment of over $36 billion has been earmarked for the construction of state-of-the-art facilities and intensive research initiatives. The overarching goal is to achieve an annual production capacity of 3.5 million BEVs by the year 2030. A major milestone in Toyota's ambitious plan is the unveiling of its cutting-edge solid-state battery, slated to be introduced by 2025. This groundbreaking technology has the potential to establish Toyota as a frontrunner in offering affordable consumer EVs, revolutionizing the industry with its efficiency, range, and performance. With a track record of exceptional management practices and a steadfast customer base, Toyota's future in the global automotive sector appears exceptionally promising. Toyota has played a significant role as an innovator, not only in battery EVs, or BEVs, but also in the plug-in hybrid vehicles, or PHEVs, and hybrid electric vehicles, or HEVs categories. These eco-friendly vehicles, forming a substantial portion of the EV market, have garnered widespread acclaim and adoption. In Europe and Japan, Toyota has witnessed remarkable results in EV sales, boasting an impressive 61% EV sales mix in Europe for new vehicles and 42% in Japan. Building upon this success, the company envisions a remarkable 29.7% year-on-year increase in global EV sales by the fiscal year 2024, with BEVs playing a significant role in driving this growth. In anticipation of an evolving automobile industry characterized by scaling demands from consumers, Toyota is diligently preparing to address vehicle shortages. By 2024, the company plans to augment production units by 10.1%. Looking further ahead, Toyota sets its sights on producing an additional 3.5 million EVs annually by 2030, with an interim target of 1.5 million units by 2026. To meet this ambitious objective, Toyota is making substantial investments in the construction of facilities in Japan and North Carolina, with estimated costs of $2.4 billion and $3.8 billion respectively. In its unwavering dedication to sustainable transportation solutions, Toyota is not solely focused on BEVs. The company is actively pursuing the development of fuel cell electric vehicles, or FCEVs, as a viable alternative. Japan's commitment of $50 billion to create a robust hydrogen production and supply network bolsters the potential of FCEVs to cater to diverse consumer preferences. Despite formidable challenges such as price surges and shortages in the automotive market, Toyota remains resolute in its optimism. The company is well prepared to navigate the risks posed by increased materials pricing and logistics costs, demonstrating a firm commitment to shaping a more efficient and sustainable future powered by EVs. Let's look at some price actions of the TM stock. On July 27, 2023, Toyota Motor Corporation, or TM stock, closed at $164.68 per share, reflecting a modest gain of 0.15% from the previous day's closing price of $164.53 per share. The trading volume for TM on that day was 10.7 million shares, slightly down from the 10.8 million shares traded on July 26, 2023. Toyota's market capitalization also increased to $223.2 billion, up from $223.08 billion the day before. Technical indicators suggest a bullish trend for TM, with the MACD indicator showing the MACD line crossing above the signal line and the RSI indicator reading above 50. Year to date, TM has shown a solid performance with a 13.19% increase. The 52-week high for TM stands at $169.07 per share, while the 52-week low is $130.07 per share. TM opened at $164.58 on July 27, 2023, reaching a high of $165.05 and a low of $163.94 on the same day before closing at $164.68. Overall, Toyota's stock price has been on a slight upward trend in the past week, trading above its 200-day moving average, which indicates a positive outlook. However, it is worth noting that the stock is still below its 50-day moving average, suggesting that the current uptrend may not be fully sustainable at this point. In other news, in China, Toyota Motors' joint venture with Guangzhou Automobile Group has made headlines for prematurely ending contracts for nearly 1,000 dispatch workers, shining a spotlight on the escalating price competition in the world's largest auto market. The JV, formed between the Japanese automotive giant Toyota and China's state-owned Guangzhou Automobile Group, or GAC, decided to lay off these workers over the weekend, raising concerns about job security and labor practices in the region. Reuters conducted interviews with 3 affected workers who requested anonymity due to privacy concerns, and they confirmed that compensation was offered as part of the contract termination. These workers were initially employed through labor service companies and assigned to work at the factory in the southern city of Guangzhou. In response to the situation, Guangzhou Toyota Motor Corp., the Toyota JV in China, issued a statement to Reuters explaining that the termination of contracts for approximately 1,000 workers was a result of recent production levels. The company emphasized its commitment to adhering to legal requirements by providing necessary economic compensation and offering detailed explanations to those impacted by the layoffs. However, this development has raised questions about the stability of employment in China's automotive industry and the treatment of dispatch workers. The GAC Toyota factory, boasting an annual output capacity of 1 million vehicles, currently employs around 19,000 individuals, according to the information available on its website. The factory is responsible for producing various models, including popular ones like Camry, Levin, and the recently launched BZ4X electric SUV. With the rapidly evolving market dynamics and consumer preferences in China, the auto manufacturers are facing challenges in managing production levels and workforce requirements. Toyota's decision to cut jobs at its Chinese JV follows a similar move by Mitsubishi Motors in July. The Japanese automaker announced its intention to reduce staff costs at its joint venture with GAC in China as part of its efforts to revitalize its business amid market challenges. However, Mitsubishi's restructuring plan is yet to be finalized, as they have not reached an agreement with their local counterpart in China on the specifics of the plan. The production of Mitsubishi's new Outlander model remains suspended, further indicating the severity of the conditions faced by foreign automakers in China's competitive auto market. Among foreign automakers, Japanese brands experienced the most significant sales decline in China during the first half of this year. According to the China Association of Automobile Manufacturers, their market share has decreased from nearly 20% to 14.9% compared to the previous year. On the contrary, Chinese automakers have been gaining ground, with sales of domestic brands accounting for 53% of the total market share. This shift in consumer preference has put pressure on foreign manufacturers to adapt their strategies to stay competitive in China. In an effort to recover its sales in the challenging Chinese market, Toyota has been heavily reliant on its electric vehicle models. The company initiated a price war, following Tesla's lead, and reduced the starting price of its BZ4X EV by 15% in February. The move was aimed at appealing to the growing segment of environmentally conscious consumers in China and enhancing Toyota's position in the EV market. As global demand for electric vehicles continues to rise, automakers are vying to capture a larger share of this burgeoning market. Over the past month, stakeholders and online users were initially bullish on Toyota's stock, expressing optimism about its potential performance in the market. However, as they closely observed Toyota's relentless pursuit of excellence and its strategic initiatives in the electric vehicle sector, their sentiment has been converted into an even more positive outlook. Toyota's proven track record of innovation, coupled with its substantial investment in research and development, has instilled confidence among investors and online communities, leading them to believe that the stock will continue its upward trajectory. With the company's unwavering commitment to producing cutting-edge EV technology, stakeholders now firmly believe that Toyota is well positioned to capitalize on the growing demand for sustainable mobility solutions, further fueling their conviction that the stock is poised to rise. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comments section. Hit like and subscribe to our channel, $1 World, for more such penny stock videos, and we will see you in the next one.